All right. Lock and loaded. Hey, what is going on out there in the world? This is the Russell Journal. I am Russell. I'm your host, and this is 10 to a million. So we've got a few new fixed updates, as you can see right here. We have we get the actual account balance right here. So I won't be really doing doing this green thing, the snapshot with the slides. You can see the price and kind of where we're lined up at. It does seem a little weird on there. Seems better over here, but it doesn't seem like it's working on that. Huh. Well, we're learning new stuff. That's supposed to be an arrow right there, by the way. Oh, it's green. I'm going to have to change the color of that. Well, I learned all sorts of new stuff today. All right. Well, all right. Okay, so let's talk about day trading. Talk about the day trading journey. We're going to talk about from 10 to a million. All right. Okay. It's not really okay. So we're going to begin this weird. Okay, we'll talk about what I did today. Okay. I jumped into IWM early on this morning, went long. The breakout looked like it was failing. I cut it, made a $4 win. I flipped short then. Well, it fell down and it bounced up and it looked like it was also going to fail again. So I didn't want to waste that. So I flipped short, picked up a $16 win on that contract and cut out just in the nick of time because everything bounced and went way up there. We're pretty close to, I shorted to 198. And by the end of the day, we were up right around 201. It was 200 and change. So, as far as the trades go, technical bounces, I scalped down, scalped up, did exactly what I was supposed to, respected my risk and things of that nature. One of the things that I personally have to be careful with, and this is why I want to talk about the subject of how to trade with a small account. Okay. Now, believe it or not, this is going to be the third time I have built back a small account. I've done this multiple times before to varying degrees of profitability. And so there's some stuff that I probably need to clear out of the way before we continue on with this. Okay. Very first thing, you are not going to be able to start this process. Okay. If you're somebody who's going to do this, you are not going to be able to start this process and from day one go from $10 to a million. Okay. You do not have the skills to do this. I almost don't even have the skills to do this. First of all, my chances of pulling this off are probably 10 in a million. And so, which would be like what, 1 in 100,000? They're probably more like 1 in a million. So if I actually pull this off, it's going to be incredible, right? But I don't want to be boring, so let's do something incredible. With all of that being said, when you start with a small account, you can't afford to take big risks. Okay. You're going to see in the market, you're going to see YouTube videos with guys putting in $200 and turning out thousands of dollars. Okay. This is a mistake I have been making for months now. This is a mistake. You cannot do this. You have to measure your moves. Because first of all, you don't get that many moves in a day. Okay. You have to understand these guys who are trading, right? And they're making thousands of dollars. They're also making 20, 24 trades a day. Okay. So they're sending out a lot. They're taking a lot of shots, right? And the idea is that to miss small with your shots, miss really small with your shots. And then eventually that one big one comes in and they get the big move up. Okay. And so what you're seeing and what you're hearing is not like this guy identified this one exact time where it always goes up, right? The market tests it constantly. As it goes up, it tests every level. And eventually it does that enough in such a right way on such enough like news and catalyst that it skyrockets. Okay. These guys, they're trading over and over and over again in the position, and they're they're just managing a position. They're buying into the dips, buying into the dips, buying into the dips. And when it rolls up, then they hit it. There's tons of stuff in here where these guys, they're using different techniques and different strategies. There is not one point where these traders are buying at one place and one position and catching that ride to the moon every time. I'm sorry, it's impossible to do, and it's not happening. Okay. So what you have to shoot for if you're going to trade with a small account, you don't have the number of opportunities that those guys have to produce. So your opportunities have to count for something, and that something needs to be a measured percentage of the gain. Okay. You can see here, I'm up $189. We made almost a $20 win today from our 171 where we were yesterday or day before. And so the thing is that we have to look and go, that's 10% of my account. If I could produce at 10%, listen, I did the math on this. From this point, from the $189, if I did 10% every day, I would double that account every 10 trading days. That's every 2 weeks. It would only take 32 weeks to trade that from where it is to $1.5 million. Okay. It would take less than a year to trade that if I could hit 10% per trade every time. Okay. So when we're looking at this, now here's the thing. That sounds incredible, but it's unrealistic. Producing 10% at that rate is not good. It's not easy. Okay. And the bigger your account gets, right? When you put a zero behind this number, when you get another zero on there and you start taking some of those bigger risks, the risks will hit, the wins will hit, and you'll only make 10%. But you can clip that zero really fast. And I've done it twice now with an entire account. Where I take those big risks, everything goes against me, and I lose very quickly. So look to take that percentage of your account, and when you do add that zero, that percentage is going to slip. Okay. Now the dollar figure should be higher at some point. Okay. You should, right now I can make $20 and that's 10%. But when I get a bigger account, I can make $200 and that's only 3%. Okay. So really moving that money takes a lot more. Okay. And so like when you're doing this small account stuff, you really don't want to be, listen, you want the big wins. You need the big wins. The big wins, they can help. They can be a huge help, and man, do they make you feel good. But consistent profit is what we need to gun for here. I am looking to double this account in the next 2 weeks. I'm hoping, or 3 weeks. That's what I'm hoping for. By the end of February, this thing should be high 300s, close to 500, close to. Okay, you can see I put under here this nice little bar. Woo! This is the goals, man. So we started at 10, but we bumped that up. We're over 100 now. We're coming into the 200. We want to hit that 250. And then from 250 to 500. So my first goal is to get that 250. Okay. That's my first goal, but I'm not going to get there right away because listen, I may knock it out of the park. I may nail the best trade of all trades ever. I may nail that bitch, but I'm probably not. Odds out of all of the runs that happen and all the setups that happen, I'm probably not going to get that big move. When I take my shot, because I don't know if it's the big move. I don't know how much money is behind every move up and every move down. I know how much volume's in any one candle at a particular time. I know when we're in these trades, So as far as like the day trade goes, I can lock in that profit. I can lock in that 10% and I go, right? Do it again tomorrow. Do it again the next day. Do it again the next day. Listen, man, you take $200, put it in a savings account. You won't make 10% in a day. You won't make 10% in a year. You won't make 10% in 10 years, right? The reason we do this is because it allows us to make a large percentage on a very small amount of money. Okay. That's what makes this so appealing to me and why it seems like a viable source of income for me. Okay. Now, getting it to 1 million, I'm sure we're going to learn some more lessons about that. I'm already reading some books about those upper echelon moves and what you have to do. And even then, I know. Okay. So now, quick segue here. If you didn't get a chance to read the description of this video, I talk about everything up to this point. Okay. And one of the things I talk about that's really important in there is that if you have $50, you can start a trading account today. You can start trading right away. The thing is that you need, in order, if you're going to day trade like this, though, you need your technical analysis skills. You need to understand market structure. You need to understand market psychology. You need to understand trade planning. There's a ton of stuff that, like, in order for you to deliver consistent profits, you're going to have to develop, and it's going to cost money to do it because you're going to need to practice. And plenty of people will tell you trade on a simulator, try out the simulator, do the simulator thing. The one thing the simulator will give you an illusion of, or can't, is what the emotional, how emotional you get while you're trading, and how that actually affects your trading. And some of it for good and some of it for bad at these levels. You know, your instincts can usually tell you what to trade. I will tell you, though, your instincts can't tell you what price to pay for it, where to buy it, and where to sell it. Your instincts will fail you every time. Okay. And I am the voice of experience on that. I do it every day. Okay. So boom. All right. That being said, let's jump in and talk about what happened today in the market. It was a very yo-yo day for the market. Was not really great as far as market goes. I'm going to go over here and pull up Webull. Again, everything did, I believe, close up a little bit higher. Cryptocurrency is to the moon. The Dow closed up. Wow. Closed flat, up one point. S&P was down 16. And the NASDAQ, well, the NASDAQ took a big bath, down 82. Okay. So there is, in these financial markets right now, there is some chaos and confusion and argument as to what is the value of this next year. Okay. You're going to hear him talk a lot about, and you've already heard me talk about inflation and this and that and the other thing. What is the value of this year? That's really the question on everybody's mind. And can it be more valuable? Okay. This is what we want to, and where we're trying to figure out what's the right side of the trade. Okay. Is it going up or is it going down? And it is argumentatively really uncertain. Okay. And your talking heads have a bit of responsibility to control the amount of fear that you have. Okay. Because they want to maintain their power, right? When they get on CNBC and they're talking about things, their power is to make you a little bit afraid, just a little bit afraid, and they give you a little bit of hope, and let you take that and grow it to whatever direction you want it to, or whatever direction you do. Okay. So the thing is those guys can't come on and overly sensationalize in any one report how bad things are. Okay. And they can't, and when things are good, they also have to be like, well, we're not sure about these valuations, but they're going up, like it's just good. And then what they do is they give you that little bit of either fear or that little bit of hope, and then they bring it out in mass. It's over a long period of time. And eventually you will make insane, crazy decisions because you've been exposed to this long line of fear for a long period of time, or this long line of hope for a long period of time, or this questionable hope. It's questionable, hope for a long period of time. this is the power of the media, is that they can hit you over and over and over and over and over again. Okay. And in that point, you have to start looking, and this is where like we talk about like market structure, market psychology, trading analytics, and trading behavior to see what's happening. Okay. And we wait to see what happens, because the investors are going to move this market a few times. And this is one of those times where the potential for them to move the market is pretty huge. Okay. Now, as of right now, the traders have been in control. We reached down, we hit a bottom, and now we are in, and the traders have driven things up pretty good. And we're in control. The real question is, are one of these big institutions gonna get scared and dump? Okay, that's the real question. Is are the big institutions going to go and dump it? Okay, and in this we have sort of two possibilities. Okay, well, there's three. One, the institutions decide there's no reason to be afraid. Let's take it up, and they start moving that sideline money. We've talked about the billions of dollars that's sitting on the sidelines waiting to come in. They come in and they hammer this, and it's back to market euphoria. The other thing is obviously the thing what we've talked about. Hey, things are not good. Let's get out of this position, and they just dump it, and that's where you'll see the market crash actually happen. The one other thing they may decide to do is go, well, we'll just short it, right? And short the market. So you've got these three sort of possibilities as to what's going to happen. And we're all sort of left wondering and speculating as to what the big money is going to do. And contrary to popular belief, contrary to all the stuff you saw in the GameStop space, yeah, there's a few hedge fund managers. There's Citron and Melvin and Ray Dalio and some of those other guys who will get on and they'll make a lot of noise about how good things are or how bad things are to shore up their position, right? They'll get on the rah-rah, right? Or on the, oh, we're all gonna die, right? The panic. And they have some control. The Jim Cramers of the world have some control over whether or not, there's market euphoria or market fear. But the real big money, they aren't talking to you. They're not talking to me. They're not telling anybody what they're doing. You're looking at, listen, we've wiped out like something like so many $1 trillion worth of market value in the last week or in the last month. Where'd that money go? They wiped out the value of it, but they didn't wipe out the money. Some short got that money. Some, big institution sold their position and took all that money and put it in their big fat bank account. But where'd that money go? It's not gone. The money that made that move up didn't leave. Sure, the value is not there in the market, but the money's not gone. So where did it go? And so you kind of got to keep that in the back of your mind, that money's sitting somewhere out there. And if somebody bought, somebody sold. And if somebody sold, then somebody got paid. And if somebody got paid, then they have money. So where'd it go? So we have to kind of like think about like what happened. Now, because of this, we are at a bit of an inflection point. The traders are, we're hovering right at the median trade price for most of our indexes. We've seen a rejection of the median price, so we're probably going to have to test the double. What do they call it? The two standard deviations from our median price. If you are trading and you don't know what I'm talking about, then check out the Bollinger Bands. That will show you the top one is 2 deviations above, and the bottom one's 2 deviations below, and the middle is the mean. That's the middle price, or basically the average, and it's the mean. It's not the average. Okay, so make sure you understand what the mean is and how that's relative. But so yeah, that's really That's really what you need to be looking at there is is the mean and where we're possibly going to go. And I'm thinking right now it looks like we're going to the downside. Although, like I said, the Russell 2K has showed a day and a half of some pretty strong buying. A lot of resilience to the selling and the shorting of the Russell 2K. So, and I would imagine a lot of guys are short the 2K and long the Dow. So that's possible. They're probably also short the Nasdaq and long the Dow. So, nice little spread they got going on. So, as far as the rest of the week, okay, tomorrow DuPont's earnings is really big. On Wednesday, the DuPont is a big manufacturer, so those guys are going to tell us what manufacturing is really doing. We're going to have an idea. No more manufacturing, producers, manufacturing index, the PMI, producer manufacturing index, PMI. We're going to get a real look at it, and I guarantee you, I'm pretty sure it'll be down. It'll be bad, and DuPont's going to take a pretty bad bludgeoning. I'm looking for some puts, baby, on that one. I'm not. Hey, they could come out and surprise us. I'm expecting Disney to pull an Amazon, and all of a sudden, all the numbers look the most amazing they've ever looked after last quarter. So, but we will see. There's a good chance that Disney is working on its headed towards its second standard deviation. So, really, those are the two big things. Now we'll get some unemployment numbers and other stuff coming up this week, and we'll talk about that as it happens. But as everything goes, I'm getting pretty tired, and so you guys can just pretend I said a cliche and have a good night.